The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Now, Basil Chapman.
Good morning, everyone. Basil Chapman on this Wednesday. Oh, the throat keeps on doing funny things. A little sip of tea. Here we go. I need to keep it in a lower register. On this Wednesday, the 12th of February, so just remember, I'm going to be out for a couple of weeks. I'll be back, just taking a break to my newsletter, but there was a little issue with my posting today, so we've got to resolve those. But in the meantime, back at the ranch, we were in short yesterday, the Dow, because of this pattern. So in the Chapman Wave methodology, we're always looking at three core patterns besides everything else that we look at. We always want to understand that markets can go straight up or straight down. They can go from one point, pull back, and then go back to that point. They can go from one point and go up and then come back to that point. So you've got straight line up, straight line down. That's one. Cup formation could be a V-shaped formation, but a cup formation, two. Arch formation, three. You can get a combination of 1 and 2 or 1 and 3. In this case, you've got 1 and 3 where it's the dreaded H. The reason why it's the dreaded H, because if the market goes to a DE or if it makes it a top on the left side, pulls back sharply, and then rallies but arches over at a peak A or a peak B, if it takes out this left side low, that could mean that if it closes 2 sessions out of 3 below that low right there, left side low, there's a real good chance you could even have a 1-to-1 to the downside. On the upside, and that's kind of the pattern that we've been seeing. Let's just see if I've got it right here. Yeah. So you've got a Y-shaped pattern where you pull back and you retest that and you break it and you can go higher. You've done it a few times there. Now you've got this very large Y, very positive Y pattern, which says you need to break and sustain at least 2 out of 3 bars above that left side high, and then you can go considerably higher. Well, we went to 45,073 in the weekly chart back in early December. And then in January, we tested it by 20 points, let's under 20 points lower at 45,054. And the weekly chart says nothing wrong here in the 9-period moving average over the 14. But look at the MACD. It's deflecting lower. Look at the stochastic. The stochastic was absolutely fantastic, over 80%. Now it's at 77% in this reiteration to the upside. And the other aspect that I'm looking at here is this red bar should have been there. Yesterday was a bit of an aberration. You just suddenly had Coca-Cola, IBM. There was another one, a third one that had a big, Intel, out of the blue, Intel, which is just in the doldrums. There's a big spike to the upside, and it's probably just some news. And that helped the Dow. But generally, I'm looking at it and I'm saying, I don't care about, right now, Dow's down 408, the S&P is down 46. To me, this is not the issue. The issue is that we have been moving to the upside, and what I've noted since the end of December, beginning of January, is that everything is pointing to a very choppy February into March. And maybe we even get that traditional low in March or October. You remember, those are the 2 months that are very often the precursor for a really sharp move to the upside. I don't know. All I'm saying is, it seems to me from the patterns that I'm looking at, from the struggles, if I'm looking at the Dow, now the Dow has too many tech stocks. It just has too many tech stocks. It's like one too many. Before we had the financials, there was one too many. I think MasterCard's now out, Visa's still in, American Express is still in. So at this particular point, the mix is weighted towards saying choppy with a very, I mean, if I show you, look at this. Let's just do this. Look at the tops that I've made here. Look, the S&P, struggling, and you've got the Chapman Wave inside track repellent zone, and the price keeps pulling back. Look at the QQQ, now down, the S&P down 50 at 6,019. Look at the QQQ. Look at that. You've got, again, three hits of the Chapman Wave inside track repellent zone, and it gets repelled. But the 9-period moving average is still very good. The MACD only now is about, not yet, it's about to cross negative. Stochastic's poor at 70%. On balance, volume has been very, very weak. In other words, this move to the upside hasn't been, it hasn't had the momentum of the thrust of the volume. Okay, so now let's go to the IWM. This is a very big disappointment. Down 3.15 at 222.46. This tried to break out of the Chapman Wave inside track repellent zone. It did that for quite a number of weeks with many prices above it. Now it's getting back into, it's under that. Let me just continue this line right here. Okay, normally when these things have concluded, I get rid of them because it's just a waste of eyesight. You're just looking at stuff that's going to fail. But look at this. It went underneath that key level. So I'm not, and now the 9-period moving average is the first index to show that 9-period moving average, the day's young, but so far it's crossing negative. And their monthly chart has the dreaded H. So I'm very cautious here. I'm saying, that's what I'm saying. And I don't like what I'm seeing. And I was hoping that I could be out the office for a little while, and while I'm there, it's going to give me time to do a bunch of things that I've been wanting to do, just format a whole spectrum of Chapman Wave methodologies, etc. And if I get a chance to do that, that's going to be great. Meantime, back at the ranch, the SMHs, which showed a little bit of tenacity moving up, are now down 4 1/4 at 245.48, and there's a real good chance in February that we're going to break the 230 level. Key support is at 245 right now. I'm just saying there's a chance, but the 9-period moving average in the weekly chart is still good. We're in a sell mode in the daily chart, so that's what the SMHs, that includes NVIDIA and all the others. Now, what's really interesting is gold has seen a tremendous amount of buying. This is serious buying. You can see by the on-balance volume. Look at that. It got a little overbought the other day, so we took a little bit off our physical gold contract, which tracks gold. It's done really well, but I'm anticipating this long-legged doji is going to see a little stalling in gold at this particular point. Leg C in the weekly chart still go to a D, and leg D in the monthly chart. So gold is still, I would put it as a focus of this particular market, of all the little chess pieces. Gold is still very important. And if you look at silver, SI is not trading as well at all. And gold is very important for the geopolitical reasons. Remember, I always look at gold as an instrument that is like an insurance policy for countries, not just regular people. This is for countries around the world. This is a global instrument, and it has to do a lot with geopolitical instability as well as potential economic stability. And I think that's kind of what we've got right now. We don't know what all this, I mean, I'm reading horror stories about people whose funding has just been cut off in really important areas of research, who really do a fantastic job. And at the same time, waste has to be dealt with. We've got a huge deficit. So this has to be resolved somehow. But wow, it ain't going to be quick. With that said, I want to just one other thing, and that's good. High rate copper. High rate copper. Up like 103. Green. High.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pro's pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Hi folks, we're back. You can see by this, I had a peak F in the 5-minute chart, and the E-mini chart was a leg before it started to pull back, and a leg E, then went to a peak E. In the 10-minute chart, what a plunge from the 5100 area right down to the 6020, but it's trying to rally. And this is what I want you to do. Just before I go, let me finish this. I had this the other day, I'd said, about a week or two ago, I'd said to subscribers, I'm watching CVS. Actually, it was a little bit longer than that. I'm watching CVS and WBA. That's Walgreen, what do they call themselves? Walgreen Boots Alliance, because one of them has to succeed. And I had favored CVS. We didn't go long. There were plenty of opportunities to go long, but it was a work in progress. Today it came out with earnings. I don't know what they said, but all I'm looking at is up 14%, at up $8.63. So this is a market of opportunity. So I'm saying to subscribers, we've raised some cash. We want to put it to work. It's going to be put to work selectively. I would like to add to some of the positions that we've had that have had spectacular gains and could, in fact, hopefully pull back quite sharply from here. And I include the AIQ, which is the ETF for the AI sector, Robinhood, which has had just massive gains from 16 to up to the 56s. I'd love a big pullback. But here's a brand new group, and I think that CVS is doing very well. So this is on my list. I didn't realize they were coming out with earnings, and my guess was going to be that the earnings would be a little better than it had been, just from the action of the chart. That's gone. Now it's got to be a complete fresh thing. So if it pulls back, I don't know, it's going to take about a week or two. If it's going to pull back to the 200-period moving average of 58, it's at 63 right now, or even get to the 55s. That's going to be quite something. If you look at the monthly chart, you could buy it anywhere here because it's way, way off the highs that were made in the 100 and double top in the 110 area in the monthly chart, slumping all the way down to the mid 40s. So, but I don't want to do that. I want to have a little patience. And I think that it's important. Now, there are buyers all the time, and that's what's been the resiliency of this market has been superb. So that just says to me, let me go back. I want to look at both the positive side and the negative side. Unless 43,879 is taken out decisively 2 out of 3 sessions, this is a daily chart of the Dow, there could be a lowercase h that goes to a lowercase m, just a sideways movement. I think there's tremendous resistance up in the 44,900s for the Dow. I think there's tremendous resistance for the S&P in the, wrong thing. I didn't want to go, did I just mess it up? I did. Don't do that. Let's just do this. Go back. Good. Okay, let's just, and the VIX index, the trend today hasn't even gone. Let's see what the low today is. 40. It's 40 or over 40. So I don't have any reading right now. If it was a tad lower, I'd say then we'd have a down day tomorrow, regardless of what the futures do. But most importantly, I just wanted to show you this. Look, the S&P has that resistance. To climb above it and to start trading, 6128.18 was the all-time high. Kind of a double top between the 6,099 level of early December. So this is a level to monitor. If at any point in the next 2 weeks there is a close above 6135, that is a breakout, and I think that that'll just bring in buyers and short covering. I think it's going to be choppy. I think the weekly chart saying, hey, for another 2 bars or 3 bars of the weekly, you could go sideways for a while. QQQ trying to come back here today. It's actually at the high of the day, down 231 at 525. That's fine. But you've got a tremendous amount of resistance at the 630 at the 530 level. If at any point in the next week or so it starts to trade above 535, then that 539.15 all-time high on the 16th of December becomes a target. But I think it's more choppy. Selectivity, and that's really going to be important. Okay, with that said, a couple of questions came in. I just wanted to do bonds. So here's the bonds. The bonds are huge, down sharply. The TBT, which went almost to the 200-period moving average. This is the ultra-short Lehman 20-year T-bond. This is yields right here. It's trading at 37.08, 3.708. It went to a peak D right there at 38.96. This is just telling us that you got to be really careful that yields are a factor in this particular place. So I suspect that right from this moment on, rallies are going to peter out. They're going to fail, and we're going to make lower highs and lower lows. Doesn't tell you how low you're going to go. But at the same time, it does say that there's a concerted effort, that there's a cap on the upside. The downside, I think we'll make lower lows, but I'm not saying crash yet. There's just too much money on the sidelines waiting to buy and a lot of nervousness out there. Okay, so I did that. So a quick question came in. Can I look at the GDX? So the GDX, remember, is performing very well, but nothing like gold. What do I anticipate? You see the high that was made right in the weekly chart of 44.22. I should have put that in there. 44.22. I think that's going to be retested when I'm not sure it's in this particular phase. I think we have probably going to have some digestive days in the next week. But I suspect that come March, we will get to the 44.22 level and maybe even a little higher. Another reason why I say that is if you look at the GC, this is the gold continuous contract. Look at the technicals. The MACD is good. The 9's way over the 14. Price is way over the 9. Something would have to happen in gold that really takes it in the daily chart down to the 2800, and it's speed that's going to be very important. So I'm not overly bearish. We do have an insurance policy because we are 3 times long from the exact low of the 13th of January. To mitigate that, we've got a 2 times short. I'm prepared to kind of break even. I just wanted insurance to say that I'm anticipating chop, and that the upside is going to be limited, and there will be sudden spikes, and maybe the downside just starts to make lower lows. Kind of the pattern that I'm looking at. Ready for anything. Have some cash position that we can put to work. I don't mind the position we're in right now. So that's the GDX. Those are the parameters. Did I actually give you parameters? Yeah, so upside for the GDX is that a high of 44.22. It's at 41.59. That's not very far away. But then I think you're going to bump into a lot of resistance. You could make a leg E in the monthly chart, but at that point, I also suspect that I don't know if there's no relationship really to the dollar. The dollar's doing something independent because it has to do with international currencies and favoring the dollar right now, and other currencies are pretty weak. So that's important. If you're looking at the one other thing I haven't looked at right now, crude oil, which had a very nice rally for a couple of days, 2 days, now it's stuck. I just think, look at this, Chapman Wave inside track repellent zone in the weekly chart. I think crude oil is stuck. So here we go. That was the one question. Then a Tiger, TIG. A Tiger, I want you to know about Tiger. So TIGR, I follow this every once in a while. It's being brought up. This is UP FinTech H Limited. Oh, it's a FinTech. So it's in a leg F in the daily chart at 823, up 78 cents. That's a huge percentage move. If you look at the weekly chart, it's trying to climb to the midpoint of this big, ugly bar, and that would put it at about 10. So I'll come back to it in a moment. There's a lot to do, and I'll be right back. Oh, I didn't do Bitcoin. Bitcoin's stuck. Bitcoin is stuck. I'll be back.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Building wealth trading in the stock market seems impossible to most people. They think it's too volatile and risky. Most people aren't going to take the time to educate themselves on how to do it right. But you're not most people, are you? At TFNN, you'll get the guidance you need to refine your strategies and techniques to invest like a pro. Because you'll be a pro. All TFNN subscriptions, books, software, and courses are available at TFNN.com. And I'm even going to tell you how to get them for less. Use TFNN's Tiger Dollars and you'll get up to a 20% bonus on your purchase. And once you apply them to your account, Tiger Dollars are automatically used for all future or recurring charges. Tiger Dollars also never expire, are fully transferable, and are a great way to add savings to your newsletters or services. Become the investor you were born to be at TFNN.com. TFNN, educating investors.
This portion of the Tiger Technicians Hour is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at direction.com. Read carefully. Distributor Foreside Fund Services, LLC.
Let me just thank Jacob and Tommy for organizing my little software stuff, my opening call. Everything is gone. I just put a test out, so you can take that off if you want. It all worked. Whew, man, I was up last night with my computer guy. We were setting things up for my laptop and all that. And I thought everything was set, and all of a sudden today, trying to post, it didn't post. So now you've got a rally coming up, only down 37 in the E-mini, gone to leg B in the 10-minute, leg B in the 5-minute, and the new leg B, leg C in the 1 minute. So just remember, there are a lot of people out there still believing after all these days that you've had, the one-offs where you've had, a deep seek, you've got all these days where you had a smash to the downside because of something, and then the market came soaring back. I think this time is different in the sense that now you've established that there's a lot of real estate resistance at the top. It's just the way it is. We went through it in a moment. So question about Tiger, T-I-G-R, U-P, financial, fintech, holdings, leg F. Yeah. So what I wanted to say is that normally what I would look at is, has it broken into a very severe body of a red down candle? And it is right now, it's in the wick, it hasn't gone to the body. But if it does get, it's at 833. If it does get to 882 or higher in the next day or two, there's a chance. I'm not sure it's going all the way to the top, but I suspect that the 990 level will be a target, at least in this first attempt at a big breakthrough. The monthly is starting to improve, and it looks almost like a biotech, the way you have these long wicks in the monthly, and then the price closes at the low with the body of the candle just at the bottom. So that's the way it's looking right now. Most importantly, I would say, I don't know what the story is. Maybe it has to do with the interest rates. I don't know. But 751 to 732 in the near term, a close below 732 would be say, stuck again. But right now it has the momentum for the upside. I hope that helps you. Next question came in. Squares with my thoughts. Oh, it's a China fintech. Okay, let's just look at SoFi in the meantime. SoFi is trading down 0.08 at 1475. So that's American. SoFi Technologies, online banking, financial solutions, student loans, etc. It's working its way to the top, but it's struggling. Let's look at XLF. This is the financials. XLF, big red candle, down 46 cents. I was wondering about this. This is an all-time high, and that's a peak C. We made the Dow back on the high that was made in early January. It went to a C and then failed. So I don't know. Maybe C's are going to be the failure pattern for a little while now. But this is a C, and it's leg D in the weekly chart, leg E in the monthly, and there's no other way I can count it. This is a C. So I'm not sure if we're going to go to a leg D and then have a struggle over 52.26. It's not far away at 51.06 right now. But if you look at the 914, that's very strong. But the MACD's turned down, stochastics at 66, on balance volumes weak. Yeah, it's a tough spot right now. So let's look at the KRE. The KRE is holding quite nicely, down $1.12 at 63.80, only because of yesterday's very strong candle. Thank goodness for that. Otherwise, this would have been down further. We are long this, thinking that there's this rotation that's going to go on. It's a struggle. It's a concept. And I've only had some proof of the pudding, not enough to say regional banks are going to the moon. The regional banks are actually holding okay right now, but not great. Question came in, where was it? Right there. Oh, it was on the other side. Yes, could you look at some of the Mag 7s? So they're not really Mag 7s anymore. Look, okay, so let's go. Apple trading right now, it's just stuck in the lower range. This is what I'm talking about, that the tech sector, even if you've made new highs recently, I think is going to be under some kind of pressure, and that just allows areas like the pharmaceutical, the drugstores. WBA, I think, is still has a lot of problems, but they are turning the corner a little bit. I think out of the two, CVS and Walgreens Boots, I think CVS is the better one, and that's what we've got. Look, Apple is very weak right now. If you look at the monthly charts, what are you talking about weak? I mean, to an all-time high of 260.10 after the 124 low of 2023. So March, I mean, this is March to almost March. 2 years later, this is fantastic. Yeah, it's having a digestive phase. Look at Amazon. Amazon trading right now down 3 at 229.75, made a peak G. This is now going to be a peak G at an all-time high of 242.52. I didn't have time to look at to see if there were any round numbers. I think there was one going in. No. Oh, actually, no round numbers, but it's made a peak E in the weekly, probably a peak E if there's no new high this week. And later, so Amazon could digest, big deal, so digest for a little bit. Let's go to Goog. Googie. So Goog right now is way off the low. Way off the high. The high was 208.20, 208.70. And I was also looking for, yes, there is. No, there isn't. I thought I didn't see any round numbers here. So sharply lower from 208 down to 185 right now. 185. That's a big move. And the weekly chart says, digestive phase. Monthly chart says, leg F, it's still pretty strong. So that's what I'm saying, that it's a rotational thing, and you will get these buying phases that come in. I don't mind them at all because it saves the day for some of the stocks that we've got fairly new positions in. What am I missing here? Netflix and FLX is a monster, right? Netflix, peak C right now, it should still go high. This is really strong. Monthly chart, leg D. Oh, this is just, it's a monster. I mean, it just says everybody's got Netflix. Okay, so that's strong. And what am I missing? Let me just do Tesla right now. So I spoke about Tesla, and I said, I'm very negative Tesla for a while. We didn't go short. It was my fault. I just thought, it's such a tough one. There's always a news event, but that's not the issue. The issue is that when you've got anyone, I don't care whether it's the world's richest man, I don't care whether it's one of the world's brightest men, it doesn't matter what it is. If you lose your focus, remember we had this with CRM, Salesforce. We've had it with so many different issues. We had that with Welch when he was at GE. We had that with Immelt. When you start to do other things and you're losing your focus, we had that with Kathy Wood. It says just be careful of that particular instrument, because if the boss is out there writing books or doing other things, joining the White House, you can lose focus for your own ventures. And that's why Tesla, I think, has been, to me, it says be very careful. There's still quite a lot of work to be done with Tesla before it gets back on the road again. I'll be right back. Dow's down, only 238. S&P's down. Not bad.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
So what I think would make the most sense right now is just to go over what I'm looking at since I will not be able to do my show for a couple of weeks. Have a sip of water here. The volatility index. The volatility index is trading at 16.10. It's up 8 cents. It is in total denial. It says that everything's just wonderful. And that will change if at any point it's not the one-day pop-up like that 2251 level back in January or the February. It's all tariffs and things like that. February the 3rd popped to the 20.42 level. It's if at any stage, and it should be a later stage, not in the next day or two. It's got to be, I think, 43. It's got to be a little later on. If the Dow starts, let's just give you numbers. So if the Dow, well, first of all, the VIX index, if it's over 21, and it does that, it keeps popping over 21 over a period of 2 or 3 days. It doesn't have to always close there, but it's 21's the number. That and the Dow, now I can go to the other. So the Dow is trading, why do I keep typing it on the chart? Because I haven't hit the little rectangle. There we go. And the Dow is trading under 40, right the low of that bar there. 43,528. So if it at any point in the next week or so, if it actually gets there and that VIX starts to move higher, anticipate a sudden slide. Will the January 13th low of 41,844 be hit? Well, that's the assessment I'm going to make over the next day or two, maybe over the weekend, to see whether or not we continue to hold the 3 times long or we just get out of those and say, hey, we've had fantastic profits. We've taken a little bit off along the way up. The last one was almost at exactly the high the other day. And now we also have the 2 times short. That's a kind of insurance. It's a directional move if we get Today's low is already 44,104. We're trading at 44,329, up 200, almost 200 points above that. So if we take that, the low of today out at any stage in the next day or two, now you got to start watching that left side low. So that's there. Now, I always like to look at both sides. The lowercase h can also become a lowercase m. So this can go down, then arch over. If it doesn't take out the left, especially if it doesn't take out the left side low at all, even if it closes above it, but it doesn't even get there, then you can see a second arch formation. It doesn't have to be bigger. It doesn't have to be small. It's just an arch formation. If the arch formation goes and closes above 2 out of 3 sessions above the arch high, in this case around about 44,923, that would be really positive. If it can't even get there and it's arching over again, that's a second arch in the M formation, lowercase m, because it's rounded. And that says watch out, because then if you take out the left side low, that's going to be very serious. So that's the downside. I also have to always look at the other side, because there are always two sides to a market. Actually, there are three. There is such a thing as going sideways. Sideways on a very short-term basis isn't sideways because you're going up and down. But when you're looking at the big picture, let's face it, look at the SMH's weekly chart. Look at this, SMH. Don't tell me this isn't sideways. That is sideways, right? So it can go on for months, in fact, 6 months or more. But that's not the issue. The issue that I'm making right now is that I have parameters that I'm looking at, and the arch formation right now is suggesting that you have an H pattern, and that by the end of the day, look, it looks as if we're going to close down only 60 points or 80 points. What if there's a sudden burst of selling in the afternoon? Then you've got to watch this low of the day, because if we do close at the low of the day, that is a very negative sign. It says you're probably going to take out this left side low. But if we manage to rally, and the level to watch on a very short-term basis for the Dow, now most of you do not watch the Dow. I look at the Dow every single day, but I look at the S&P, I look at everything. 44,390. If this market in the next 2 days closes above 44,420, this is the Dow, then this candle from yesterday, that high could be tested. But then what I would do is I'd probably say, then you've got a lowercase h that could be making a lowercase m. Is this going to be a turnaround? So now we see the upside, a break to the upside? Not the way I'm looking at the market right now. There are just too many overbought situations and too many negative situations. I think if anything, chop sideways with slightly lower highs and lower lows, that could be the pattern. But right now, that's what I'm looking at. Let's do the same with the S&P. So the S&P has to break that resistance, that Chapman wave inside track repellent zone. So that says, on a very short-term basis, if the S&P by Friday is able to close above 6,055, then you can start to see a test over the next week in this area, the Chapman wave inside track repellent zone. I don't care what it is. On any day, if there's a close above 6101, if there is a close above 6103, I would say that's really positive for the short term in terms of holding support and going sideways. That's what you'd be looking for. The QQQ, NDX 100. Down $1.85 at 525. At any point, if it breaks this trend line resistance, you can see how many charts have gone above it and then come back and taken it down. I mean, we saw that in SCS. Was that it? No, that wasn't one of those. Well, we've seen it in a number of stocks. So we saw it in the IWM. Look, the IWM went way above, and then bam, it's back in the inside track repellent zone. So all I'm saying is that becomes a pretty big force. So QQQ, you'd have to see a move into the 535 area and closing in the 530s 2 out of 3 days. I would say that would help the weekly chart tremendously to go to all-time highs. I don't think it's going to happen. I think the day is going to look a little ugly when we close today. In the meantime, back at the ranch, we've got the IWM. IWM is just acting very poorly. 200-period moving average of 218. That could be hit if we take out today's low of 221.79 any day in the next 2 days. AVGO, just fill the gap, AVGO. So let's just look at that. This is Broadcom. Yeah, this is holding pretty well. You see, that's what I mean, that there are stocks that are holding well. They're not breaking to the upside, but they're actually holding well. Holding well is some kind of a form of distribution. If it doesn't make new serious highs above the last high. So this high right now, no, it didn't do that. Okay. The high today is 535.20. The high a few days ago was 237.93. So it hasn't taken that out yet. 237.89. Yeah, just missed it. So yeah, it's holding well. That's what I'm saying. Some stock, look at this. Intel, is that giving back some of the gains yesterday? Yeah, it's giving back some of it, not all of it. Look at that monthly chart and week chart. Horrible, Intel. So with that said, we'll take a sip of tea. All right, XLU. This is the utility index holding quite nicely. Now, this is different. This is holding S&P Select Utility Spider Fund. I'll talk about it when we return. But there are some areas that might hold quite well over the next 2 weeks or so. They don't have to break down, they don't have to break up, but they could hold very well within a trading range. I'll be right back.
This year has already been a wild ride for the market. We started off heavily in the red, reversed back to all-time highs, and we now have a trade war looming. Trying to play this chop as an individual trader leads to death by 1,000 cuts. Where does this market go next? Should I add to this position or cut my losses? Where is the next opportunity? Tariffs, trade wars, analysis paralysis. Don't become a victim of this intense market. Instead, join Larry Pesavento for the second and fourth Friday of every month for 3 hours of live trading. Larry has been through many markets just like this one, and the insight he provides is invaluable. The events for this month are February 14th and 21st, 9 a.m. to noon Eastern Time. Get in here and let's start trading. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento. A pro's pro with over 50 years of experience, Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Are you ready to take charge of your financial future? TFNN is your gateway to the world of trading and investing. Whether you're starting out or scaling up, TFNN empowers traders and investors of all skill levels with top-notch investing systems, strategies, and techniques. It's time to protect and grow your money with insight you can trust. Join us live Monday through Friday during market hours for exclusive content that moves with the markets. At TFNN, we bring the trading floor to you. Our seasoned hosts are here to answer your calls and questions live on the air. Check out the Tiger's Den for just $1 and follow us on YouTube and become part of our vibrant community. And remember, at TFNN, we're so confident in the value we provide that we offer a 30-day money-back guarantee on all new premium newsletter subscriptions and services. You have absolutely nothing to risk, so why wait? Tune in live to Tiger TV and transform your trading journey, because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Hi, folks. So the question that came in, what would tell you that the market's going much higher? So it's real simple. The levels that I've just spoken to you about, if they're taken out to the upside, that's just saying the buyers of all the dips have been correct. I think this is the one time that it's going to say, be a little careful, because this one's a little bit more serious for the Fed, and that's really what counts. I could be wrong. The day's young. Anything can happen. We're only an hour and hour and a half into the trading day. So with that said, let me do this within the context of what I think is going to work. So for instance, look, Bitcoin has just been sideways, but it's got this H pattern. It's got the cup formation, but that didn't work, so now it's got the arch formation. If Bitcoin starts to trade under 88,000 at any point, I think the upside, at least for the short term, becomes very tenuous, that it suggests that there will be a digestive phase, which there could take you all the way into sometime in March before you make some decent low for another rally. But it is already a peak D in the monthly chart and a peak E in the weekly chart. So that's Bitcoin. Another question came in, and I think I missed it here. Oh, yes. So you have got stocks that are rallying. Look, GE up $1.10, all-time high, 209.92. That's outstanding action. Really good. So this is what I'm saying. We've spoken about this for about 2 months now, saying there's a real good chance there's a stock like NVIDIA, which is bought for other reasons than you would buy GE. It's bought for the momentum, not the PEs. That's different. And that's taking the digestive phase, and it's great to see a stock like a GE. GE should have been back right away instead of taking NVIDIA and putting it into the Dow 30. It should have been GE back. GE was there since the beginning of time. So that's what I'm looking at. Very stock selectivity is really important. I want to see how areas like ARKK, that's the innovation ETF, holds in this particular phase. I want to see how Hood reacts to earnings coming out today sometime. Does it spike up? Does it pull back? I'd love a pullback. We'll see what happens there. Have a wonderful couple of